Bitcoin just crashed below $71,000 for the first time since April. Strategy, the company that built its entire identity on never selling Bitcoin, just sold Bitcoin for the first time in 4 years. Altcoins are down 15, 20, 25% in a week. The fear and greed index is flashing extreme fear, and the crypto community, as it always does during sell-offs, is panicking. But there's one asset sitting in this market that just entered a structural reality that makes this sell-off fundamentally different from every crash that came before it. And before you dismiss that as hopium, let me show you the receipts. Because Zebec just completed its final token unlock in March 2026, 100% of the supply is now circulating. There is no more dilution, no VC unlocks, no team vesting, no hidden sell pressure waiting to hit the market. And while the rest of the market is pricing in fear, smart money is looking at the balance sheet. Let's break this down. To understand why this moment is different for Zebec, we first need to understand what the market is actually pricing in, and more importantly, what it's completely ignoring. The sell-off is being driven by 3 forces. First, geopolitics. US-Iran tensions have escalated significantly since mid-May. The market was already jittery, but when you introduce the possibility of a prolonged conflict in the Middle East, risk assets get sold first and fast. Crypto, despite everything we've built over the past decade, is still treated as a risk-on asset by institutional capital. When the world gets uncertain, the sell button gets pressed. Second, the strategy shock. For 4 years, Michael Saylor built an identity around one idea: never sell Bitcoin. Strategy was the conviction play, the infinite money glitch of buying BTC with convertible debt, and when they announced their first sale in 4 years, even a small one, the psychological damage was massive. If the biggest Bitcoin bull on the planet is selling, the market thinks, what do they know that I don't? And third, ETF outflows. The spot Bitcoin ETFs have seen consistent daily outflows throughout this correction. Institutional capital that entered during the rally is now heading for the exits. The flows that pushed Bitcoin to all-time highs are now reversing, and altcoins, which are leveraged bets on Bitcoin beta, get hit 3 times harder. So, here's the question most people aren't asking. What happens when you take an asset with zero future dilution, real revenue-generating infrastructure, and 65,000 workers using it for payroll, and you sell it off alongside everything else? The answer: you create a mispricing. To understand this, we need to differentiate between what Zebec is and what it isn't. Most altcoins follow a predictable playbook during crashes, and it's not pretty. First, inflationary supply. The vast majority of tokens in this market are still unlocking. Every month, more tokens hit the circulating supply, from team allocations, from VC vesting schedules, from ecosystem funds. During a bull market, demand absorbs that new supply. During a crash, that new supply becomes relentless sell pressure. The token isn't just fighting macro fear, it's fighting its own tokenomics. Second, venture capital exits. When the market turns, VCs don't hold. They de-risk. They have limited partners to answer to, quarterly reports to file, and a mandate to return capital. A crash is when they sell hardest. And they're selling tokens they got at a fraction of the public price. They can sell into a 90% drawdown and still be in profit. You can't. Third, speculation-only value. Most altcoins have one thing holding up their price: the expectation that someone else will pay more later. There's no revenue, no cash flow, no real-world utility that generates demand independent of market sentiment. When the music stops, there's no floor, just gravity. This is how altcoins get destroyed during crashes. The supply keeps coming, the buyers disappear, and the floor vanishes. Now here's where things get interesting. Zebec is not in that playbook, and the reason isn't narrative, it's math. Point 1, the supply. March 2026 marked the final ZBCN token unlock. 100% of the supply is now circulating. Let me say that again, because it's the single most important thing about this asset that most people still don't understand. There is zero future dilution, no VC unlocks coming, no team vesting hitting the market next quarter, no ecosystem fund dumping into your position. When you buy ZBCN today, you're buying a token where the supply side of the equation is locked, finished, complete. Think about what that means during a sell-off. In a standard altcoin crash, you're not just betting the price will recover. You're betting it will recover faster than new supply floods the market. That's a race most tokens lose. ZBCN doesn't have to run that race, because there is no new supply. Point 2. Real revenue. Zebec isn't a promise of future utility, it's but and see the 65,000 workers streaming payroll through USD1 right now. That's not a roadmap item, that's not a testnet. That's live infrastructure processing real wages in real time for real people. During a macro crash, speculative tokens lose their narrative, but payroll doesn't stop. Workers still need to get paid, the pipes still need to function. Point 3. Distribution infrastructure. The Stellar Development Foundation didn't just list Zebec. They selected it for native USDC payroll infrastructure. This isn't a partnership. This is a promotion from application to infrastructure provider. And with the MoneyGram integration, those payroll streams can cash out in 170 countries. This is not just a feature, it's a fundamental shift in how money moves from employer to worker. Cryptographic certainty, per-second settlement, global reach. Point 4. The revenue model. ZBCN's buyback mechanism is now fully operational. With 100% of tokens circulating and the treasury holding 50% of the supply, revenue-driven buybacks create structural demand that doesn't depend on market sentiment. The market can be panicking, the buyback still executes. The market can be fearful, the revenue still flows. This is not speculative demand, this is mechanical demand. Short answer, no. ZBCN is not like the rest of the market, and this sell-off is pricing it as if it is. So, let's do the math. Because this is where the asymmetry lives. ZBCN's circulating supply is fully distributed, 100%. There is no fully diluted valuation that's meaningfully different from the current market cap. When you look at most altcoins, the FDV is 2, 3, 5 times the market cap. Because billions of tokens are sitting in treasury wallets and vesting contracts, waiting to hit the market. That's not a forecast. That's a guarantee. The tokens exist. They will enter circulation. The question is only when. With ZBCN, that question is closed. The supply book is written. Every token that exists is already in the market, and every token that enters a buyback is removed from circulation. Now, overlay the demand side. 65,000 workers receiving payroll through USD1 means consistent, recurring transaction volume. Payroll is not discretionary. Workers don't say, the market is down, I'll skip my paycheck this month. The flow continues, the fees continue, the buyback continues. The Stellar integration opens a pipeline to traditional remittance corridors, a market measured in hundreds of billions of dollars annually. MoneyGram's 170-country network means workers in emerging markets can receive payroll in USDC and cash out locally. That's not a crypto narrative, that's a banking product. And the execution phase thesis, this is critical, does not depend on Bitcoin's price. The revenue from payroll streaming, the transaction fees from the card product on Base, the infrastructure fees from the Stellar integration, none of these require BTC to be at any particular price. They require workers to get paid. They require money to move. They require the infrastructure to function. Think about it. The market is selling everything the same way, but not everything is the same. A speculative token with inflationary supply and no revenue should get crushed in a crash. That's rational repricing. But an asset with zero future dilution, real payroll infrastructure, 65,000 workers, and mechanical buyback demand, getting sold alongside everything else, that's not rational. That's a classification error. And in crypto, the biggest opportunities usually look confusing, right before they make sense. So, what does this sell-off actually mean for ZBCN? It means the market is giving you a price that reflects a narrative, not a balance sheet. The narrative says, crypto is crashing, sell everything, risk off. The balance sheet says, 100% circulating supply, zero future dilution, 65,000 workers streaming real payroll, global cash-out infrastructure in 170 countries, revenue-driven buybacks executing regardless of market sentiment. The gap between the narrative and the balance sheet, that's where the returns live. Smart money doesn't panic during crashes. Smart money asks one question, is this asset fundamentally different today than it was at the top? And if the answer is no, if the infrastructure is still running, the workers are still getting paid, the supply is still locked, and the revenue is still flowing, then the sell-off is just a sale. This is the execution phase, and the execution phase doesn't care about Bitcoin's short-term price action. It cares about one thing: is the product working? The product is working, and in crypto, when the product is working and the price is disconnected from that reality. Serikaz Maya Amrda Venstein. Somadikatsa. It always does. Here's my question for you. During a crash, the market doesn't care about nuance, but you should. So I want to hear your thesis. Bank rails, the legacy financial infrastructure that treats payroll as a batch process, or worker rails, the Zebec model of streaming, per-second programmable settlement. Which one survives this downturn? And more importantly, which one is being bought while you're watching this video? Drop it in the comments. Let's build the thesis together. If you want more Zebec deep dives, hit subscribe and turn on notifications. New content every Wednesday, Friday, and Saturday. Morning anchor, afternoon bridge, weekend deep dive. And remember, in crypto, the biggest opportunities usually look confusing, right before they make sense. I'll see you in the next one.